Welcome, ladies and gentlemen, to Commodity TV, and it's my honor and pleasure today to interview Ronald Stöferle, the co-author of In Gold We Trust, the real famous gold and macroeconomic, or let's say precious metal mining macroeconomic report, which was just presented and was just distributed out and published. And he's also fund manager of the Incrementum AG in Schaan. Ronnie, good morning to Vienna. How are you?
Hi, Jochen. Good to see you. How are you?
Good to see you. Thanks. Very well. The monetary climate change is your big theme. And before we talk about this, also congratulations, as Austria won yesterday 3-1, the first game in the European Football Championship. So hopefully your prophecy that Austria is going into the quarterfinal this year then for the first time, will succeed. And the monetary climate change is your big theme of your In Gold We Trust report. How do you see that here?
Well, recently in an interview, I said at the Federal Reserve, they probably enjoy listening to Guns N' Roses, their song Patience. All we need is just a little patience. And I think that central bankers, not only in the US, but also over here in the Eurozone, keep telling us that it's only transitory and temporary, so that inflation numbers will come back pretty quickly. Our view is completely different. From our point of view, we have seen a fundamental turnaround. We quote the fabulous book Tipping Point by Malcolm Gladwell, and in the report we explain the main drivers why we think that inflation is now really becoming a topic again, and why inflation will continue to trade higher. So why we don't see it as a only temporary phenomenon.
Okay. Yeah, and I mean, inflation is quite real. If we look at US consumer prices, that's the first thing which came out, I think, on Friday with plus 5%. This is quite crazy, I would say. And on the other hand, if we look, for example, on how do you say that, plywood, I think it is, like a unit of plywood. It was last year in March, something like $35 per plywood unit, and today it is like $98 per plywood unit, the same amount of wood, yeah. And so this is something like almost 200% inflation here, or 150% inflation, and this is real. So what does it mean then in reality? Will we see now, let's say, horrendous wage increases? Will we see the wage price spiral inflation moving up? We saw it in Germany, for example, that all the drivers, the train drivers, will now go into strike, for example, for higher wages. Is this something which will be the short-term future? People are realizing, oh, Jesus Christ, I'm not earning that much and prices are going up. Rent, for example, milk, butter, it doesn't matter. All those daily groceries. Will this lead into a major problem?
Well, I think most of those factors have already been prepared, and the foundation has been laid over the last couple of years. But over those years, I think the deflationary or disinflationary factors were still stronger than the inflationary factors. Now, what are the drivers? First of all, we see velocity of money has stabilized, and people are becoming now more confident again. They start spending, start investing again. So velocity will rise and meet huge amounts of money that were created over the last couple of quarters. Then we're seeing that Asian countries are starting to export inflation rather than deflation. We shouldn't forget that the whole opening up of China and of Eastern Europe was a huge driver for deflation, that the power of the Chinese labor force was unleashed to export to the world. We saw excess capacity sending global prices into tailspin. So this is a strong driver. We are seeing a structurally weaker US dollar. We are seeing that globalization is retreating. We're seeing that demographics are turning gradually more inflationary, and we are seeing that big government is back. I think fiscal stimulus is now really what we should focus on. Everybody knows that the scepter went from basically from central banks now to fiscal policy, and the frugal Swabian housewife that we still saw in the Eurozone, especially, you know, the Germans always coming up with their budget surpluses and stuff like that. I think this is something that that nobody really cares about anymore. So I think we should focus more on fiscal stimulus, and the consequence is that fiscal stimulus always has a much more direct and a faster impact on the economy, on economic growth, and on inflation.
That's right. Yeah, it looks to me like that we have opened financially Pandora's box, because it looks like unlimited debt is the new modern trend. If we look at the US, this is, it doesn't matter if we go to 28 trillion, 30 trillion, or 35 or 50 trillion, who cares? It really looks to me like. And isn't it all about, yeah, how can I say that, about national banks like the Fed, like the ECB, because they are finally paying all those bills through buying all the government bonds.
No, that's not true. We are paying the bills.
Of
And
course,
I think
but in their thinking.
the consequence, of course, is a decline in the purchasing power of money, and I think that should be the correct definition of inflation. And we're seeing it, you know, when it comes to real estate, when it comes to equities, when it comes to commodities, obviously, when it comes to cryptocurrencies, we see that we need more units of US dollars, of euros, of Swiss francs, whatever, to buy 1 unit of real assets or of hard assets, and that's, from my point of view, Ludwig von Mises would have called it the crack up boom. I think we're right in the beginning of that stage, where people to some degree lose confidence in the future purchasing power of money.
Absolutely. So what's the ultimate insurance? Gold, silver, mining companies?
Yes, I mean, we crunched the numbers in the report, and we found that commodities and followed by gold have got the highest inflation beta. So they are good places to be. One sector that isn't the best sector to be, obviously, is bonds, and we know that the so-called 60-40 portfolio doesn't perform in an inflationary environment. And I think this is really one of the main question marks going forward. I don't know if inflation rates really start over the longer term, start staying above 2.5–3%. How a classical 60-40 portfolio will perform. I see pretty big reallocations of asset allocators going forward, and people will question themselves, well, historically, what has performed in inflationary times? And we crunch the numbers, and as I've mentioned, commodities and precious metals are the best inflation hedge.
There's of course then the question, where do you see gold and silver, for example? What's your target prices?
Well, I think we're with our gold price model for the end of this decade that we explained and introduced in our last year's In Gold We Trust report for the very first time. The target price was $4,800 by the end of this decade. I think we are right on track. For this year, we introduced our option market-based model in this year's report, which said that around $2,200 and $2,300. This is something that we would see by the end of the year. And for silver, I think that silver has somehow decoupled from the price of gold. not only because of the Reddit squeeze that really put silver into the spotlights again, but also because we're seeing such dramatic developments on the supply demand side. You know, as you know, Peru is, I think, the second or third largest silver producer these days. It holds the largest silver reserves, and I'm not sure what the future will bring, and how the political developments will be in Peru. But I know that going forward, I think that for foreign companies, I think they won't have too much risk appetite allocating capital in countries like Peru. So I think it's from a technical and relative point of view, silver is extremely interesting, but also from a longer term fundamental supply demand view.
Okay, super. So finally, what are your 10+1 prophecies for this year?
Well, you know, some of them we already achieved them. I said last year that inflation rates in the US would go over 4%. I said that yield curve control would be implemented. It hasn't been, but I think as soon as we see the 2% on the 10 years, I think that an implicit or explicit yield curve control will be implemented. I said that Japan will be the best equity market from the developed markets. I said that Joe Biden will step back in fourth quarter and Kamala Harris will become president. We'll see. I said that Bitcoin will rise above 40,000. Well, you know, that already happened with making a new all-time high at 64,000.
And then the
We're
way
pretty bullish, pretty bearish on the US dollar. So I see the Dixie, the dollar index, falling to 82. We're very excited about nickel, seeing the nickel future rising to 25,000. We still like uranium. We can imagine uranium prices going above $40 per pound. We see gold rising above 2,300 and oil to trade above 70 per barrel. Well, this has already happened, and I think that there's still quite a lot of upside. And as I've said, Austria will reach the quarterfinal of this year's Euro Cup.
And you made the first step to do that.
Absolutely.
Absolutely. Super. Ronny, thank you very much. All the best. And really hope to see you soon. And we see us latest in 6 weeks at Lake Wörthersee at our next private symposium here, which is great. And we will talk then about some actual market tendencies and what's going on. Great. Ronny, thank you very much for the interview.
Thank you very much, Jochen. Take care. Bye-bye.
Yeah, ladies and gentlemen, that was Ronny Stöferle, the co-author of In Gold We Trust and fund manager of Incrementum AG in Schaan in the beautiful Fürstentum Liechtenstein. Yeah, you heard it. Gold, silver is the ultimate insurance for the climate change for the monetary climate change. And that's the one thing. And on the other hand, really, it is important to read through this report. I really urge you to do so because it's for the understanding of macroeconomics and of interconnections in this globalized monetary world. You really should go through that, and it gives you a lot of knowledge and information, and also really interesting mining companies which are part of the report too. Yeah, thank you very much for watching us. You can download the report, of course, of the website which is shown. And wish you all the best. Thanks, and bye-bye from Switzerland.